Okay, so looking ahead to this week starting December 16th, it's the final full week before Christmas, but we still have a few important things to look at in markets. We have the Bank of England meeting and the Bank of Japan meeting, setting interest rates obviously in the UK and Japan. We also have a smattering of important data from China, the US and Europe, also a lot from the UK, including unemployment data. So that will all be important in the context of what we've just lived through, obviously being the UK election. And we did have some final sign of a deal between the US and China last week. So the context of this week will be whether we can continue these record highs that we've seen in global as well as specifically US indices. Now, in terms of a market backdrop, I've already alluded to there that we've been having record highs on Wall Street. UK shares, there's a lot of talk about whether they're on the cusp of a resurgence. I'll talk a bit more about that in a minute, but it was a good week for the FTSE 250 specifically. In currency markets, we saw some weakness in the dollar. The Fed meeting last week was generally seen as on the dovish side, and we've been seeing some dollar weakness. Likewise, we've been seeing a little bit of gold strength. Gold somewhat, though, capped between optimism in equity markets, so no need for a haven, where in equity markets are at record highs, but obviously some dollar weakness as a positive factor. So gold still caught in a range, and oil prices still largely optimistic after that OPEC decision, although there have been some US inventories figures that have slightly gone against the grain. So before we specifically talk about some of these top topics, the data and specifically the UK data after the election, we'll first go through the economic calendar. So right up there at the front of the week is some important data out of China, and obviously all this is in the context of a generally slowing economy that's been dragging down world growth this year. So we've got industrial production and retail sales out of China, both expecting a modest pickup, and so that will add a little faith to the idea that we're seeing a global growth rebound next year. The unemployment data and inflation data out of the UK, and obviously all this is in the context of the election. And then again, later in the week, we have the Bank of England decision on rates, and unlikely to be any change there, but we'll talk about it nonetheless in just a moment. Also the BOJ, of course. And to finish off the week, we have the latest on the US GDP. It was already revised up in the first revision. We'll see how that changes. Right now, the consensus is around 2.1%. Now, as I mentioned, we do have some UK economic data to watch in the context of this big move that we saw in the British pound last week. We've seen 2-year highs in the pound against the euro. We've seen 8-month at the last time of checking highs against the dollar. And so obviously, the pound, one of the strongest performing currencies. It happened as the election was called in the UK, and the result has added to the gains. We're now plus 135 in cable. And so the question is, well, how much further does this have to go? The economic data out this week is expected to be generally pretty solid. So we're looking at unemployment of 3.9%. We're looking at GDP, not too impressive, to be quite honest with you, at 1%. But that's on a year-over-year basis. But nonetheless, most people are agreeing that actually it's quite a good environment for the consumer at the moment, with inflation low, yet wages are still rising at a decent pace. And so now with the Brexit uncertainty theoretically out of the way at the end of January, there's some cause for continued strength in the British pound. We're potentially unearthing a new big uptrend in the pound here. Related to this, obviously, is the thinking around UK equities. Now, it's the beginning of a new year in January, obviously, but it's also the beginning of a new decade. It's not been a decade of outperformance in the UK, and obviously that's been very much hindered by the uncertainty around Brexit in the last 3 to 4 years. And so then the question mark that investors will be asking is, when there are record highs in the global benchmark for equities, when there's record highs in the US, and there's been multiple of them this year, where do you find value? One potential answer is the UK. And so if we have a strong majority Conservative government who's able to make some clear policy decisions, less uncertainty from the government, potentially Brexit is at least partially sorted, then you can see there is a backdrop for investment coming back into the UK, growth picking up, and maybe a pickup in earnings as well. The only damaging aspect being the foreign earnings, which obviously get hindered by a stronger local currency. So potentially some more upside in the FTSE 100, or even if it's not upside, perhaps it doesn't see as much downside. If we do see some bigger global correction, then actually maybe the downside in the FTSE is going to be less than we would see elsewhere, where the valuations are more stretched. Now, very much related to this, I want to talk about these central bank meetings. We do have the Bank of England up front. I think it's worth saying we've just had the UK election. Obviously, there's some changes to be had. We're going to have a new budget at some point soon, but you would imagine a lot of this stuff isn't going to happen until after Christmas, so it doesn't make sense for the Bank of England to do anything particularly broad here. We also have Mark Carney nearing the end of his tenure. We should find out who his successor is pretty soon, and that will again give us a better feeling as to where policy is going at the Bank of England. For now, it almost we'd normally say that they're not going to do anything, but let's listen to what they say. We almost don't need to listen to what they say this time, because there is going to be a new leader in place and a new government doing different things come the new year. In the Bank of Japan, well, we've just had a big fiscal stimulus program from the government of Japan, and so let's see if that's accompanied by some monetary stimulus. It's not impossible, but worth considering that Japan's been the most out there in terms of how they've tried to stimulate the Japanese economy with monetary policy, buying stock indices and the like, actually buying domestic shares. These kind of things are obviously stretching the limits of what a central bank can do. So maybe on the other side of things, we're seeing a pivot towards fiscal instead of monetary, and that would be yen positive. And so if we're talking about dollar yen, that would be dollar yen negative if we start to see a bit of a pivot from the central bank here at the end of the year, away from monetary easing towards fiscal easing. Right, I think that's about it. Thank you very much for watching, and if you enjoy these videos, please make sure to follow myself and LCG on YouTube and social media.